Hello and welcome to another technical analysis tutorial. In this tutorial, I want to talk about how to determine when a trend is changing to enter a trend early or trade early. So I really want to take you through an example here and also talk about a little bit about the psychology behind it and why so many amateur traders and retail investors make mistakes and lose money when trading, because they oftentimes have the wrong mindset and they really can't wait to get into a trade. They oftentimes get into a trade too early and then get out frustrated because the trend isn't moving in the direction they want it to, and then they get frustrated, they exit the trade, and then the trend suddenly changes and then they enter, but probably too late again. So I really want to take you through that and really help you determine, what can you do to avoid these issues and give you a few tips. So let's start here. We are basically entering a downtrend here. So we've marked a high, we've made 3 highs and higher highs actually, and then for the first time we've made a lower high. So this is already where the first problem comes in. So some retail investors, for example, would jump in here because they think, the price has gone down now, and there will surely, because we had these 3 highs, there will surely be another high coming, but actually it isn't. And it isn't, and you can already see that by looking at the RSI, and I've talked about the RSI on this channel before. We have, first of all, here a bearish divergence on the RSI, which essentially means that while the price is or did really go higher in these 3 waves, it was already losing momentum. If the RSI is dropping, it means that the RSI is losing momentum. And you have this divergence when the price is actually pushing higher, but the RSI is going lower. That does not mean that a trend needs to change, but it's a first heads up, it's a first indicator. It only indicates, but then you'd have the second indicator here. So I, for example, when there is a bearish divergence, I wouldn't get into a trade. So when we then have that low here, I would be very careful. I would want to see, do we really make a new higher high, or do we now make a lower high? And we've made a lower high. So you can actually see now that we've come down very, very strongly. So a very strong downtrend, a lot of red candles, a lot of red candles, a lot of red candles. Actually, we came into the oversold area of the RSI, which is below 30. So at this point, when you see the first green candle, you can see that here, a lot of red candles, and then the first green candle. This is where a lot of people will think, right, now the trend reverses. We've got a few things here. We've got that long pin bar down here, that long lower wick. Then we have a green candle. A lot of people will jump into the trade here, will jump into it because they think the trend is now reversing. But this is unfortunately way too early. And it all depends on your personal horizon, investment horizon, because, do you want to hold long term? If you do hold long term and you think that long term it will go up and you are in a longer term uptrend, yes, that could still be a viable option, but, it is not how you as a trader would want to do it. Because first of all, if we go further to the right, what did happen? Well, we can actually see that we came down very, very strongly. Yes, indeed, something is changing here because we have the first green candle and we also have another green candle here, and we've got more green candles. If you compare that to this very strong downtrend, down from 57,000 nearly down to all the way down to 32,000, that's a huge, huge drop. And you barely see any green candle here. Here, 2 very weak green candles, a little bit of a consolidation, but you make these lows here, and you have very strong red candles. And yes, the first heads up indeed is that you have these lower wicks and the green candle, but it's still too early to enter a trade. And why? Because you still make lower lows. You can see that here. You've got one low here, one high here, so make a lower high from there, another lower high, here's another lower high, and there's another lower high. So you still make lower highs, you also make lower lows. And while you can already see, and that is the second heads up, while you can already see a bullish divergence now forming on the RSI, which means that the RSI is actually going up while the prices are going down. That is the second heads up that something is changing. But again, it is not a necessary confirmation that really something is changing and that the trend must reverse now. Because if we go down further to the right, you can see that we made one attempt here of a higher high, but we failed to break above that high here. So we made it above that high, we made it above that high, we didn't make it above that high, and then dropped even further, made another lower low. And then after that, we made another lower low. So you can clearly see this was not over yet, this downtrend, even though it was slowing down, you can very clearly see that, but it was not over yet, the downtrend. The downtrend only, and you can clearly see a difference here, just purely looking at the price action. You can clearly see here that two things. First of all, we hit a very important support level down here. That was the first heads up. Very important support level, because we touched it once and twice here, and possibly even further before, and we touched it again. First heads up. Second heads up, this huge green, nearly engulfing candle. It doesn't go down far enough, but it's a very strong green candle which engulfs pretty much that previous red candle and the red candle before. What you have then as well is you have a very strong trend to the upside, very strong. You didn't have that, you know, anywhere here really. You can't see those strong green candles anywhere since that downtrend started. So that's the second heads up, that you have all of these green candles. Third heads up is that we marked a new high here, and that high for the very first time in that downtrend got higher above all these previous highs here. So that is a very, very important heads up. And also, but that was even before that, and that probably would have been enough for me, you broke above, in the RSI, you broke above 50. So various things coming together. You had a bullish divergence here of the RSI. You came down to a very important support level, and you had this engulfing green candle and a lot of green candlesticks which were very strong, and you broke above the 50 level of the RSI. So at that point then, together then, you know, at the latest here, we made that higher high. That would have been a very, very bullish confirmation that something is changing here. And if we zoom out, you can actually see that that was really reversing the trend as well. So coming up from, even if you had waited for that higher high up here, yeah, or maybe up here when we managed to get above it at around 42,000, you could have made some nice profit from there to all the way up here at 52,000. Now, yes, it went down once more here. That was a retest of this support level here. But it was a clear trend reversal here. But, you know, it all depends on how long do you actually want to stay in the trade, because the thing is, you can get in very early, and the earlier the better. But the earlier you get in, the higher the risk. So there was a lot of heads up coming here, and I just described it to you, this low point, the support level, which was support before. Then we had the very strong green candle and the bullish divergence, and for many people, that would have been a confirmation as well already. That would have been, or would have meant that you would have entered in wave one, which is very early in the trend. In wave one, it's obviously ideal to get in because you're very early in an uptrend, but it is more risk, right? So you could have entered somewhere here, and possibly you could have added even a moving average to just get a little bit more of confirmation. So let's just add, for example, the 50-day moving average here to just see if that would have helped us to make a buying decision. And yes, possibly we could have entered here at 34,000. So that would have probably been possibly been my entry here, because we had the bullish divergence, we had the low point here, the support level, strong green candles, engulfing green candle pattern, and the moving average. So possibly would have entered here, and that would have then given a nice profit. So you would have, with that strategy, you would have been able to enter the market in a wave one, second wave correction, wave 3, wave 4 correction, and then possibly moved up into a wave 5, or maybe that would have all possibly been wave 4 here, and then wave 5 is the last push to the upside. And based on the Dow theory and also the Elliott wave theory, which is actually based on the Dow theory, typically markets move in 5 waves, and if you enter in wave 1, the risk is the highest. In wave 3, which is the next push to the upside, obviously the risk is lower, but also you can see here you will have less profit to make. Had you entered in wave 1, there would have been more profit. Enter in wave 3, less risk, but less profit as well. So it's always a balancing act, and eventually every trader needs to decide for themselves what they're looking for. Very important always to set a stop loss as well. So had you entered here, you could have entered, you could have set the stop loss maybe below the moving average at some point, or in even, but you could have lost quite a bit of money then below that low point, depending on, you know, had there been a retest. But it was a very strong support level, so you could have even added a stop loss down here, somewhere below that strong support level to be on the safe side. Or you could have also waited for that retest here potentially, but then there would have been less profit to make. But yeah, that's just how it works. And a lot of amateur investors or retail traders or investors can't wait for these signals. They try to get in very early, too early. And if they get in too early, there is also more risk, because then the market, if they, you know, had entered too early here, there would have been the risk that they, just from a mindset point of view, they would have possibly sold somewhere down here in frustration, and then the price would have shot up, and at some point they would have got in and probably would have exited too late or something. So that is always a problem. So I just want to make you aware and give you a few tips. So a few tips here: add a moving average to get support, and maybe also use the lower time frames to more accurately enter trades. And don't get in too early. There will always be buying opportunities. If you get in too early, there is a risk that it is too early and the market hasn't really confirmed yet in which direction it is going. Okay, so hopefully you liked that video. If you did, please smash the like button, hit the subscribe button, and also leave a comment. That would be great. Thanks a lot for watching. Bye bye.